So, so I'm super excited to be here. Also, just to let you know, I have been in banking for 18 years. I started when I was a part-time teller in college. I've worked my way up through the banking world. I've worked in every facet of banking. And I've honed in my skills and expertise in commercial banking over the last 7 years. So that's a little bit about me. You can go on to the next slide, Terrence. So obviously everybody knows that we're here for cash flow management and cash flow management strategies. So specifically what we're going to talk about today is understanding the cash flow operating cycle, the cash conversion cycle, and what that means for your business, and some banking strategies that are going to help you manage your cash flow. Like he said, we will have time for questions and answers. We'll hold those till the end. If you don't have the ability to put it in the chat, write it down. I don't want you to forget. While I've been in banking 18 years, I will do my best to answer your questions. However, I still learn something new every single day. So I'll get back with you if I don't know the answer to something. All right, you can go to the next slide. Alrighty, so first of all, we're going to start with a cash flow statement. So this is something that Terrence also mentioned when he was talking about the PPP loans and not having, business owners not having all the documents that they needed to provide to their bank to get assistance with that loan. So a cash flow statement is, as you see here, the cash flow statement consists of 3 main principles inside of that statement. It's your operating activities, your investing activities, and your financing activities. And then you'll see on the other side, it says total change in cash. Those are also the things that can make your cash balances fluctuate. So we'll go to the next slide. So understanding your cash flow cycle. All right, so your operating activities are going to be your sales minus your cash paid to vendors and employees, minus the interest paid on debt and taxes paid to government. That was that first box of operating activities. The investing activities is going to be the purchase or sale of long-term assets like property, equipment, anything like that, land, whatever you might own with the business. Also, it's going to be a part of maintaining your current assets and acquiring other companies. So that might be something that you get to when you're a little further along in your banking and your business. But nonetheless, that is part of your cash flow statement. And then your financing activities is going to be like stocks, bonds, like when you're a company that makes enough money that you can give money back to your shareholders. That's what that entails. And then like loans, if you have a loan with the bank or a credit card, that's going to go in your financing activities. So understanding the cash flow cycle, this is something that is critical for every business owner, is to understand the inflows and outflows of your day-to-day cash flow operations. So for example, we'll talk a little bit more about this, but accounts payable, that's everything that you're paying out, and accounts receivable is everything that you're bringing in. If you are going through the month and just trying to get all your bills paid, and that's not a bad thing, but you pay all of your bills on the front end, and then all of a sudden you don't have any money, like your customers aren't paying you fast enough, then you might run out of money by the end of the month. And then you don't have the money to maybe possibly pay your employees. Another example of that is you purchase a ton of inventory at the beginning of the month, but the inventory isn't selling fast enough, or you're not collecting fast enough from your customers. So then you again run out of money. That creates a major cash flow problem. When we look at profit versus cash, just because you may be generating a lot of revenue does not necessarily mean that you are being profitable. You may be selling your inventory, but there again, not receiving the cash for it. And then cash management skills, understanding the above mentioned issues. Also, it's important to manage the working capital, ensure that your receivables are collected on time or in a timely manner, but and that you're not spending more money on inventory than when you're receiving. And you can see all of those things tie together very similarly, because that's the biggest problem with cash flow, is just running out of money because you're paying everything off on the front end. And then terms, I wanted to give you this definition because I wanted you to understand that terms are an agreement between you and your customer, or between you and your vendors or suppliers. And this means this is the amount of time that you have to collect the money from your customer, or the amount of time that you have to pay your vendor or supplier. So for example, maybe you're a pest control company and you go down to Jane's house and you do your job at her house, and then you hand her an invoice. And on that invoice, it says, pay this within 10 days. You have set a term with Jane. She has 10 days to pay that invoice. But your invoice could be 15, it could be 30, 60, 90 days. Some companies are even further out than that. The most important thing to know is the shorter the term, the faster you're collecting, the better that's going to be for your cash flow. So we can go to the next slide. And what we're going to talk about here is the overall operating cycle. This is how money moves through your business. All righty, so we start with the purchase of goods and raw materials. So let's just say you own a restaurant and you need to buy 400 pounds of beef. So you go down to Farmer Joe and you purchase 400 pounds of beef from Farmer Joe. So then you bring that back to the restaurant. You then cook up the meals, whatever those are. You then sell those to your customers, and the customer is fed, they're happy, and now they're paying you for that service or for that food. You end up back at the top at cash. So now what do you do with that cash? And how do you manage that cash? Once you have the cash, the cycle starts back over. We can go to the next slide. So if you look at the purchase of goods and raw materials, this is going to be your accounts payable. The business is invoiced for the materials purchased, and the invoice amount is in the accounts payable until it is paid. Okay, we can go to the next one. So this is an example of what a cash flow statement would look like. It's probably very small and difficult to read, but as you can see, accounts payable will sit in your liabilities section. The reason it sits in your liabilities section is because this is money that you owe to other people. So it does sit there. And then something else that you will hear. So for me as a commercial banker, you want to come and do a loan with me. I'm going to say, okay, I need you to send me your cash flow statement, or I may just ask for your AP aging report. That means I'm asking for your accounts payable aging report. That means that that aging report is going to tell me all the details of the vendors and the amounts that you owe out. Okay, so we'll go on to the next slide. And this is going to be on the other side of it, which is the collecting of the cash, and that's your accounts receivable. So on the flip side of this, this is where obviously the customer owes the business owner. And we'll go to the next one and we'll look at the cash flow statement example. And so on here, you'll notice that your accounts receivable sits in your assets. So these are assets because this is money that is owed to you. Again, at the bank, if I ask you for this, I would say I need to see your AR aging report, accounts receivable aging report. We will only accept this in the assets as long as you're going to be collecting within 1 year. Generally, that's when you put it on that cash flow statement, is if your inflows and outflows are going to be collected within the year, that'll go on your cash flow statement. If it's not going to be within the year, we can't look at it, we can't accept it. Because this is telling us what is that net profit amount. Are you making money or are you not making money? Okay, so we can move on. Okay, and then you end up right at the top, the managing the cash. Hopefully there's a profit earned from the sale. So we will move on to the next slide. And what we're going to talk about here is the cash conversion cycle. So the cash conversion cycle is, when do you buy the inventory to when do you actually get the cash in your bank account? So generally, on average, inventory is held for about 84 days. So we can move on. So we'll say that the business is alpha, And Alpha pays their accounts payable on day 31. So they bought the inventory on day 1. They had a term. So on day 31, they paid out. So we'll go to the next one. And then the customer pays on day 46. So you can see there's a long span of time between you pay for the inventory to when cash is collected. So we'll go on to the next slide. So that means that you have 99 days in your cash conversion cycle. When do you purchase the inventory to when do you convert that inventory to cash in your pocket? So how do we shorten this? We want to look at how do we shorten that cash conversion cycle. So we'll go to the next slide and we'll see that what if the business could pay for the inventory 10 days later? So you're the restaurant owner and you call up Farmer Joe down the road and you say, hey, instead of paying today, I'd like to pay in 10 days from now. Farmer Joe says, that's no problem. So now you've just shortened your cash conversion cycle by 10 days or 11 days, whatever. It's 31 or 41 days. And so then what if, we'll go to the next slide. What if then you could speed up the customer's payment faster and maybe collect 5 days faster? So now you have shortened your cash conversion cycle to 84 days. So you want to pay slow and receive quickly to help with that cash flow management for your business. This is, I have a good story for this one because as Terrence was talking earlier about the first year being the hardest and how so many small businesses do fail within that first year. I actually, unfortunately, have an example of that. And it was someone that was not my client. And I was just trying to help them out as a friend. And they were opening a business and they had cash. They had cash to run the business. But unfortunately, I had recommended maybe leveraging some of the bank's money as well as their cash to keep them going with their cash flow. And unfortunately, by about 6 months in, they had spent all of their cash and they had no other resources to go into to lean on. And also, you may be aware that as a new business owner, it's hard to get a bank loan. Or as an entrepreneur, you may not know that, but it is because the bank wants to see financials, a record, a history of financials to know that you can pay back your debts. So in that situation, he very quickly ran through his cash because he was not really paying attention to that cash flow and not really paying attention to when he needed to purchase things and inventory versus waiting on money to come in. And he was buying a lot of inventory on the front end and allowing himself to run dry on the back end. And unfortunately, it didn't work out for him. But that is a perfect example of why understanding your cash conversion cycle, understanding when people are paying you and when you have to pay people is so important to managing your money and operating a successful business. So we'll go ahead and move to the next slide. So now we're going to talk a little bit about how can you manage and boost your cash flow. So cash flow over profit. You always want to check your break even. For some of you that may not know what break even is, that means what you sell versus what you bring in. If that's equal to each other, then that means that's your break even. So it could be that you are making more, you're still making more than that break even, but you're still struggling a little bit financially. That is a huge indicator that you may have a problem in your accounts receivables and your accounts payables, and you would want to take a closer look at that. Monitoring your cash flow. So for a lot of small business owners, you're a one-man band. You do everything. You're running the book, you're doing the books, you're doing all the business. So you would want to, pay close attention to that. And we'll get into a second, but there is software for that. But maybe you hire a bookkeeper or an accountant to help you with that. Also, you can upgrade your software. Instead of just keeping an Excel spreadsheet, there is a lot of, if you Google, there is a lot of cash management softwares out there that are very inexpensive, and some of them are even free. And hey, with technology nowadays, back in the day, you had to write everything down meticulously in a piece of paper or a journal or something like that, and you had to figure it all out yourself. Technology is a wonderful thing in most cases. And you just plug in your data and it's going to do all the work for you, but you just don't want to not pay attention to it. Encourage early payments. So by encouraging early payments, maybe you set a discount if they pay ahead. So let's say you're that pest control company from earlier, and you go and you do the service for Jane, and the invoice says pay in 10 days. But then you tell Jane, hey Jane, if you'll pay in the next 48 hours, I'm going to send you a 10% coupon for your next service, off of your next service. You can incentivize your clients to pay you faster. Also, ensure that you have ways that are easy for your customers to pay, like using credit cards or invoicing, and they get a text message and they go and pay through the invoice. You know, make it easy for your customers to pay, and they'll more likely pay faster. Also, drive sales with incentives. Again, offer some sort of a promotion. You know, like I said earlier, maybe you're the only person that is in your business right now and you're doing everything. Maybe you would feel overwhelmed if you actually, offered a discount and then you had this huge influx of business. We'll then offer a discount for those that you can't get to right away. So let's say that you can't get to someone for the next 3 weeks. Hey, I'll give you 15% off of this service if you'll wait for me. And then that way, in 3 weeks from now, you know that you have a job and you have money that's going to be coming in from that. And then you have that steady flow of business, going into the future. And then delay or reduce expenses. So you can delay or reduce expenses. Like I was talking about earlier, you're the restaurant, you call Farmer Joe and you ask for an extension. You also need to keep in mind, what can I get an extension on and what do I need to pay now? That's important to know. For instance, if you have a business credit card, credit cards do not have a grace period. So you have to pay your business credit card on time, or that could have a negative impact to your credit score and your business credit. Whereas, for instance, you have a commercial truck loan or some sort of a commercial loan, generally those have a 10-day grace period. So you know that you have 10 days from the due date to make that payment. You can push that out a little bit further without any penalty to you. Or someone like your suppliers that you're getting your goods from or your raw materials from, they are usually not going to penalize you for and allow you to go over a few days. So it's really important to know who can you pay slow and who do you need to pay on time. Also, by reducing expenses, if you already have a bank account, look at your bank fees. Are you getting charged a lot of bank fees? Take a look at that, have it reviewed. Another area where I see business owners getting charged way over what they should is merchant services. If you don't know what merchant services is, this is how you're allowing your customers to pay with a credit card. Lots of times there's hidden fees and really high rates on the per swipe charges. So get those things reviewed. You can, and yes, there is legwork. I've heard business owners say, I could save money here, but it's just too much of a hassle. Don't let the hassle keep you from saving a few dollars, because that can really make a difference in your overall bottom line. Okay, we'll go next. So on this slide, there's going to be a lot of information. This is treasury management. This is just a fancy word for how the bank helps business clients manage their money. And there's a lot of different options. We're not going to go through everything, but I do want to hit on a lot of the most important ones, because I think it's important for you to know what they are and what's available to you. So obviously in the cash management section, you've got your deposit account. I think everybody knows what a deposit account is. That's where you start when you open a business. You have to have an account to move money in and out of. Below that is a zero balance account and sweeps account. These are, a zero balance account is a great way to help protect your business against fraud. And what happens with that is you have basically a holding or a shell account, and then you have other accounts that actually have money in them. And of course you have an agreement with the bank. As items come in and post into your zero balance account, the bank pulls money from the accounts that you actually have money in to cover those items. That means you just don't have any money sitting in that account. If that's the account number that you're giving out to everyone, then it's less likely to have fraud. Sweeps are where you're accumulating a lot of cash in the account, and the excess cash is getting moved over into a separate account that might earn interest. That would also earning a little bit of interest on the money you have sitting in your account. That's going to give you a boost to your cash flow and your bottom line. So ACH Monitor, Positive Pay, and Reverse Positive Pay. These are all fraud products. And you might sit here and say to me, why does fraud matter when it comes to cash flow? This is probably one of the areas that I'm most passionate about, because unfortunately, fraud is at an all-time high, especially with business owners, and it is climbing every single year. And how is fraud going to affect your cash management? Well, I'll give you an example. About 3 months ago, I had a business client that they resell printers, copiers, and one of the vendor or their supplier was Toshiba. And so this client is still mailing checks to Toshiba and then getting their products to resell. So the check clears the bank, everything looks good. I believe they reconcile every 45 days. The bookkeeper goes in to reconcile the account. She looks at her software and she sees that the check is written to Toshiba. She looks at the check from the bank statement and it's written to, we'll say, John Doe. Okay, that's not correct. So she immediately calls me as her banker and she's like, I've got a big problem. So I immediately work with her to freeze her accounts and all that stuff. But then after doing further research, and this is to make a very long story short, after further research, I was able to find out that what had happened is that check was intercepted in the mail. So it was either stolen from the mail or it was stolen by a dishonest employee. Don't know. But they had washed the check. And when someone washes your check, that means that they are removing legitimate information from your check and they are replacing it with fraudulent information. And in this situation, that's what happened. They removed the pay to and they put their name there. We'll say John Doe. And then he took it to his bank. They deposit it. It goes through. It clears the bank. Everything's fine until she starts reconciling everything. So what happened here? This was a $16,000 check, okay? This wasn't $100. This was a lot of money. Now, for this business, they had some excess cash sitting in the bank. They've been around for a while. It didn't hurt them as bad, but what if you're a business owner, you've been in business a couple of years, and all you have is $20,000 sitting in the bank? And all of a sudden, $16,000 is held up in a fraud claim because someone wanted to steal your check and get money. Yes, the bank got them their money back. Yes, the bank will get you your money back. But depending on the fraud situation, it could be a month. It could be 60 days. And if you have a balance of $20,000, now your supplier is not paid. So what happens? Your supplier doesn't necessarily care that you had fraud. They need their money or they're not supplying you with what you need, right? So now you're not getting your supplies. It's possible that you don't have money to make payroll. So are your employees going to come to work? If your employees aren't coming to work and you don't have your raw materials, what can you actually produce? And then if you can't produce, you're not actually selling. So if you're not selling, you're not making money. So as you can see, this is a huge issue with cash flow management because all of a sudden your business has come to a screeching halt. And I don't know about you, but I'm not sure of how many business owners could survive if their business was shut down for 30 days. It would be very difficult. So that is why fraud is a very, very, very important piece to your cash flow management, making sure that you are monitoring your accounts. And yes, typically there are some fees for these additional services, but in my opinion, what is a small fee compared to running your business and being able to stay afloat. So anyway, that's just an area I'm very passionate about because unfortunately I see it way more than it needs to happen. And then of course, utilizing your business online banking and your digital banking, making sure that you're looking at that stuff every day. What's coming in, what's going out. As your accounts receivable comes in, then, you know, that's money in your pocket. As your accounts payable go out, you can remove that from your liabilities on your cash management statement, okay? Looking at your accounts payable section, this is where you're purchasing. Some ways that you can speed up your cash flow, or at least being able to move your payables out of your liabilities quicker, is by using wire transfers or ACH origination. Wire transfers allows you to get money to someone else the same day, as long as it's a domestic wire. And that allows you to move that money out without any waiting period, and you can clear that out of your liabilities. ACH origination is very similar. It's just where they can automatically take money from your account, or you can automatically send money to their account, and it moves within about a day or two. Automated payables and purchasing cards. Automated payables is where you are automating all of your payables. It just makes everything run more streamlined. It's a software that keeps track of all your payables. So especially if you're, you know, just one person operating your business, that would save you a lot of time. And a purchasing card is generally for really large businesses, but the equivalent to that is a business credit card. And a business credit card is great for managing cash flow, because think about the items that you can't put on terms, like you have to go buy copier paper, and maybe you are that pest control company and you have 3 guys in the field and they have to get gas every day or every other day. Those are items that are going to come out of your account immediately. That's cash out of your pocket immediately. What if you put those on a business credit card? If you put those on the business credit card, you've now created a term for yourself, because you will use the credit card to buy those everyday essentials and pay it back in 30 days. You now have a 30-day term. And I'm not talking about going into debt. We don't want to go into debt, but if you use it and you pay it back every month, you're using it to help support your cash flow functions for your business. Moving over to the accounts receivable section. Again, you're going to see the wire transfers and the ACH origination. Wire transfers, yes, there may be a fee for you to receive a wire transfer from a client, but that means the money is going to be in your account within a few hours. That's a crucial thing for getting your money into your account for your cash flow cycle. ACH origination. So another example of how this works is, again, we'll go with the pest control company. So Jane down the road, you went down and you serviced her account because she had a rodent, but she's also on a quarterly contract with you, where you go in and you spray for bugs every 3 months. Okay. In that situation, you might want to put Jane on an automatic debit, which means that you make an agreement with the customer and they say, yes, on such and such date, you can automatically take X amount of dollars from my account. Well, this really speeds up the process for you as a business owner, because that means that you are able to automatically go in on that date, you take that money. You don't have to worry about the customer forgetting to pay you, or the customer writing you a bad check and you have to chase it down and collect on it, and you're getting bank fees and things like that. It just speeds up the overall collection process, and they don't even have to think about it. Remote image deposit is where you can actually set up a scanner in your office or wherever you are, and you can actually do your deposits without having to go to the bank. Another great way to help manage cash flow. The quicker you can get money in your account, the better. So let's say you're the pest control company and you have a couple of employees, but they don't do anything with the banking, and you were working until 8 o'clock at night. You can't get to the bank, and you may not be able to get to the bank for 3 days, but you've got 10 checks in your pocket. Well, you want to get those deposited as quickly as possible. That's what remote image deposit can do. Also, you can use mobile deposit with maybe your bank has mobile deposit. I know we have a mobile deposit app for our business clients. You can take a picture of that check and get it in your account as quickly as possible. Going down to more important is merchant services. So merchant services, obviously we talked about earlier, is how you can, your clients can pay you with credit cards. I always tell my clients, don't always have a way that your customer can pay you. You don't ever want to find yourself in a situation where you can't accept their form of payment. So, well, let's go back to Jane, and she's had a pipe break at her house and she's in an emergency situation where she needs to get this fixed. However, Jane might not have an emergency fund, so she needs to put this on a credit card. Okay, well, if you go to her and say, well, I don't take credit cards, even though you might be cheaper, you might be the best price for her, unfortunately, she needs to use a credit card. So she may go to the next person down the road because that's how she can pay. So you always want to be able to accept whatever form of payment people want to give you and make it easy for them to pay you. With merchant services, some of the things that I see a lot of pain points with is that some banks, not some banks, but merchant service companies, whoever that is, they will hold your funds for several days. So check on that. If you do have merchant services already and you're not getting your funds fast enough, I promise you there is someone else that can give you next day availability. That is a huge key to helping with your cash flow management. And then also just take a look at the amount of money you're paying per swipe. A lot of people want to go to the big name merchant services companies because that's what they know, that's what they've heard of. But a lot of times they're getting charged a lot more than if they were to, look somewhere else to possibly get a better rate on their per swipe charges. So things to think about whenever it comes to your merchant services. And then I also recommend a line of credit. Again, this is not about going in debt. Okay, you don't want to look up and be in a lot of debt, but a line of credit is a great way to have some backup cash in the event that your business, something goes wrong or business is slowing down. Maybe you're a seasonal business like a landscaper, and in the winter time you have virtually no business. You have some odds and end things, but you need to keep people employed because when the busy season comes, you need these good employees to be there working for you. You can use a line of credit to pay them until the busy season comes, and then you take the revenue from the busy season, pay back the line of credit, and it keeps that cycle of cash flow going for you. But again, you want to make sure that you're paying that back. You would not put anything on a line of credit that you would not be able to pay back within 1 year. That is the rule of thumb. So that is essentially all of my information. You can go to the last slide. So I know that was a lot of information I just spewed at you, but what I will say is this is my information. If you have any questions outside of here, if you want to review anything, I am open to help you with that. We can schedule an appointment and talk about anything in regards to your business banking if you'd like. But with that, I will hand it back over to Terrence.
TC, you're
Thank
muted.
you, Nikki. Thanks, I appreciate it. Thank you for all of that information, and it is a lot of information, and I hope we got a lot of questions. As I said earlier at the start of this, cash flow is one of the biggest critical, crucial issues that we see small businesses run into almost on a daily basis. And unfortunately, banks, the Urban League, other CDFIs, other financial institutions, they're not equipped to bail you out of the emergency. Unfortunately, they can't just turn around on a dime and resolve that cash flow issue with you because everybody has a process and a system that they go through for underwriting and approving loans and lines of credits. Mm-hmm. And our way of trying to help is to do this on the front end. Mm-hmm. So you don't get to that situation and then try to figure out how to bail yourself out. Literally, there was a gentleman who opened up a small restaurant in Mechanicsville right before COVID hit. It was almost as if he started in November. COVID 6 months down the road came along, or 5 months down the road during March, and the government shut all the indoor eating and dining out. Well, for a startup, that's a death knell. We didn't have any money saved up for cash. I already had inventory stocked up, and this applied to a lot of food-related businesses. The food can only stay there for so long before you have to sell it or throw it out. so that's a double death nail just because you don't have the cash flow and you got to throw away the inventory that you had to pay for. So clearly another 6 months, and unfortunately he was completely out of business. But again, we're going to try to continue to do these because we want people to be knowledgeable about the finances and the cash flows and the financial statements and how those work together. And for some people, it's harder to get than others, but I encourage people, if it is not your strong suit, go find you somebody who is good with the numbers, get them to work with you, get a bookkeeper, but have somebody to help you to understand the finances of the business, especially the cash flow part of it. And Nikki, I thought you did a great job with the cash conversion and the cash flow cycle, because when people are operating businesses, they're in there. They're providing a service or delivering a product or making a product. And some of this stuff, it's time consuming. And if it's not your strong suit, it's not, not something you like doing, but putting it to the side or delaying it only makes it worse at the end of the day. So I will allow this opportunity for folks to ask questions. This is treat this like a family affair. There's no bad questions. Everybody here is trying to help each other and help themselves. And that's certainly why I'm sitting here at 636 in my office. So does anybody have any questions? I don't see anything in the chat at this point, but unmute yourself. Feel free to ask any question. This is your opportunity to speak with somebody who do this on a daily basis, working with small businesses. And you can't get any better than that, than the people who are actually doing it every day. It's not in a textbook and it's not theory. This is real stuff.
I was saying, go ahead, baby.
Wait, Lance, did you have a question?
I just missed see if you could repeat the operating activity part. I just missed that part of when you first started about the cash flow statement.
Sure. So in your operating activities, you're going to find it's going to be your sales minus these three things: your cash paid to vendors and employees, your interest paid on debt, and your taxes paid to the government. Was that still too fast?
No, you good on debt and,
okay.
And cash owed to the government.
Taxes paid to the government.
Okay.
And interest paid on debt.
All right. Okay, that's all I had on my end.
Okay.
Anybody else?
A question, Nikki. Could you shed a little light on how the cash flow statement would represent a loan for a startup business? Let's say if you're making projections and you're estimating a loan amount, and then you also kind of did an estimate on your monthly payments for that loan. Could you tell me how that will be recorded in your liability and assets?
Well, honestly, if you're a startup, if you're working with a lender that will work with a startup, they're probably not going to need that. They may just want to know like what you're doing, whatever your business is, and then like how much inventory you plan on keeping in your business for that month, and then how much you're gonna, so like what is your cost for that versus how much are you selling it for, and then kind of figure out from there what that profit is going to be on that. But you really wouldn't have a cash flow statement per se. And what I will say to that is, I don't know if this is something you're already in the process with, but a great place to look whenever you're looking for a startup loan is the SBA. But I will tell you, as a word of advice, that if you are looking for a startup loan with the SBA, you need to get in with them before you ever do your first transaction. Because if you take a transaction, then they're going to need financials. But if you get in with them from the beginning before you take a transaction, they can actually help you with all of those startup costs to be able to keep you going for, you know, like the first year at least. And so that would be my recommendation.
Okay. I followed you. it sounded like you were giving me advice on a product-based business, but I'll be offering a service-based business. But I still
Okay.
follow your scenario. And that
Okay,
was some
good.
great
Yeah,
advice.
I wasn't sure what you did, so it can
Sorry.
vary. That's okay.
Perfect. Thank you. And then I had another question. It was relative to if you could give us some advice on establishing or how would we go about establishing a line of credit, like as a startup business? Let's say someone who hasn't started yet and someone who's within their first year. What are some tips you could give us with establishing a line of credit with our bank?
So with banks, it's probably going to be a little bit more difficult to get a line of credit. However, there are alternative lenders out there for business clients or for business owners to be able to get some sort of a small line of credit. Now, I will tell you the rate may be a little bit higher. So you are going to pay a little bit more on the finance cost on the front end, but you will have, with lines of credit, you only pay for it if you use it. So if you use it, then you pay for it. And it's generally an interest only kind of thing, which is why you also want to be careful, because you don't want to get in a situation where you're spending more than you need to, but it's there in the event that you do need to keep that cash flow going during slow seasons, and so forth and so on. The SBA also does offer products like that. So if you are a true startup without doing your first transaction, that's also something else they may be able to help you with. Otherwise, if you're in your first year, you would probably need to look at some sort of an alternative lender for that. I know that for me, when I can't help someone with something, I always have somebody in my back pocket that I believe will be able to help them. Because at the end of the day, for me, my most important goal is to make sure that my client is getting what they need to be successful. So that's usually what I do, and I refer them to someone that I think they'll be able to help them. But does that answer that question?
It does. Thank you. You answered it quite well. Thank you.
Okay.
Those were the only two questions I had, Terrence and Nikki. Thank you.
Okay. Thank you.
So I have one more question, and I'm dealing with something with my business where I'm at a point to where I can be at a standstill with my business and watch money pass me by, or I can grow from it. But I've came to understand that there's only one person that's dealing with a sublimation type printing that I'm dealing with. And I came to find out their price today. I came to find out a problem that they have today. And I came to find out the way that they set up their orders and how they do it. Before, I knew that they don't make the sublimation shirts themselves. They send them off. But I know how to do them, but I just don't have the equipment big enough to do it. Today, I just had a call that there's this person that celebrates this one person's death every year. They don't miss it. And it's at least maybe 30 to 40 people. And within this, the shirts that you can make, you can charge them $25 a shirt without a problem on it. But charging them just one shirt, you can charge them up to $50 to $60 just for one shirt, the way that they want to print it. They're not able to get it through the person who's able to get them done. But I have received a call today to try to get it done. But the reason that I can't get it done is the equipment that I have is not big enough to produce the print for big enough shirts. The equipment that I'm trying to get with both pieces would probably cost me between $15,000 and $20,000. How would I go to a lender or go to somebody to let them know this is what's going on, but this is where I'm at. This is my brick wall. Now I have some money to the side, but it still won't equal up to, now I have enough, if once I get a certain money and then put my money with it, I will have enough money to get one piece of equipment. But how would I go to somebody to get them to understand that I know what's going on, I know the statistic of it, and I know that this will be a big winner for my company because of the slimness of who's all involved with this certain type of print. So I'm based on how I'm really trying to figure out how would I go to somebody to ask for help, basically.
Yeah. How long have you been in business?
I've been in business going on 8 months.
Okay. So it kind of goes back to what Rita asked, and with the line of credit, it's kind of the same answer. You're probably going to need to go to an alternative lender that does for business lending. I have a really good resource for that, so I don't care to share it with you, for someone that you can try, try to get with, so that you can see if they can work with you. But yeah, at this stage of your business, that's probably going to be the only option at this time. Then as you can, because it sounds like you're in a growth phase because you have this opportunity, and if you don't take the opportunity, then you're kind of at a standstill. But if you take the opportunity, it could launch you into another phase of your business. And so, yeah, it's kind of a rock and a hard place. So that's where I say, don't be scared of the alternative lending. Yes, your rate is going to be a little bit higher right now, but in the long run, you're going to bring in the revenue to be able to pay that off, and then hopefully make additional profit. And eventually, you're going to be established enough to turn that into a standard commercial loan at a bank with a much better rate, or hopefully just pay it off. But yeah, so I mean, that would probably be the best way for me to answer that.
Nikki, let me ask this question in response. Is this a situation where he might consider getting investors?
That's one thing that I'm sorry, I don't mean to interrupt. I would rather have more of an investor than a loan, because of the time frame that will put me on. And I feel with an investor, the investor will get to be able to see exactly what's going on, compared to me going to make these loan payments and having not only this amount of time to pay it, but also another payment stacked on top of it from interest. And I don't think that with getting a loan or getting a lender, I think my interest rate will be very, very, very low compared to getting a loan from somebody. But I don't know. My thing is going to somebody and finding the right person that will understand what I have going on. I just don't want somebody to be like, oh, you're just trying to come ask for money. No, if there's a way that we can sit down at a table, maybe bring you in on the business just to show you that I am trying to grow. That's where I'm at. Just trying to find the right person that will help me. Because I mean, if I had the money, I would go for it myself. But I'm like a half of the portion of not having what I need to make that forwardness.
Yeah, no, and that's a really good point. I believe your name is Joe. Absolutely. But the point exactly with what you're saying is that you have to find the person or the people, then you have to pitch them the idea, and then they have to believe in what you're doing enough to then hand you a check. And so that can be time consuming as well. But yes, that is another option. And I do have clients that have been funded, by individuals, and they'll usually set some sort of an interest rate with it. It may be better than the bank, or it may not be right now, because interest rates have been so low. They're finding themselves wanting to refinance those those loans by individuals because they can get a better rate. But anyway, yes, I mean, that is definitely another valid option for sure. I don't feel like I helped you much because I don't have an investor to hand you, and I'm sorry, but yeah.
Are there any like resources to where like they will have like lenders and stuff? Because I mean, like you said, I know it would be hard. I'm only 8 months in, so I know a bank will be like, no, we need more to see. But from what I know I can prove to somebody is different than because the bank is not going. The bank is going to want to see paperwork compared to want to see, okay, show me what you're talking about. So I'm kind of like that territory that I would rather want to show somebody what I'm talking about than to go to the bank, because I haven't accumulated, like Terrence said, I haven't accumulated the paperwork yet to be able to go to the bank and say, well, hey, I'm looking for a $10,000 loan, but in my paperwork, I've only made $4,500, $5,000. So it's not going to give me the leeway I need to be able to give that conversation a language, as we would say.
Right. Yeah, and I can do more research on it and be happy to ask around and get back with you 100%. I don't know of any resources that would be able to offer up like any investors or whatever. You can Google, if you want to look at the lending route, you can Google, small business loans, and it'll, other than banks or whatever, and it'll probably pull up a ton of stuff. Like I said, I have one specific resource that I have referred clients to, that they've been awesome, and they're honest, and they're just, and then what they do is they really work with you. So what I would say to look for if you do go that route is look for someone that's going to work with you, so that when you do get to a place where you can go and transition that into a regular bank loan and save you money on the interest rate, look for someone that's going to work with you on that, because that's important.
Going once, going twice. Any other questions, that information? And you all have Nikki's contact information. Clearly she's very knowledgeable and very experienced at what she does, which is why we try to get as many people who have that type of knowledge and expertise to share with our clients and people that are running businesses that we encounter, because sometimes it's just a lot different listening to somebody else's perspective in terms of how they help small businesses. But when you get all the information that's available to you, hopefully it will allow you to make a very informed decision on how to move forward with your cash flow and your finances of your business, because that every single person that either lends money or invests money, they all are going to ask those same type of questions. What you need it for, how much you need it, how you going to get it back to me, can you prove it to me? And the more you can answer those questions in a very definitive, deliberate way, the better your chances are. But to Nikki's point and my point earlier, for startups, it's almost like a brand new ball game, and nobody gave you the ball and they didn't give you the rules. So you really learn how to play the game as you're learning how to dribble the ball all at the same time. But the more you know, the better you'll be at getting it. So in your instance, Lance, you may be better off trying to find a smaller investor, because you're talking about, not a whole lot of money necessarily compared to a $200,000 loan or something like that.
And like I said earlier, Terrence, like, you all are more than welcome to reach out to me. I'd be more than happy to talk with you or answer any additional questions if anything else comes to your mind. If you do want to know like who I have as resources that can possibly help you, I'm more than happy to give you all that. Just let me know.
Absolutely. I appreciate that, Nick. And I will make sure I get everybody's email information, and that way you can have theirs and they can have yours. And that way you can kind of make the connecting much easier. And I'm going to make one last editorial announcement before we sign off. Starting next week, we will move into our Building Better Businesses 3-part series. And this is going to be all about accounting and bookkeeping for small businesses. So we will talk about financial statements again. We'll talk about invoices, accounts payable, accounts receivable, but also invoicing and collecting, which is kind of what Nikki gave you in a nutshell. You got to figure out how to get your money quicker, and the people you got to pay, you got to figure out how to drag that out as long as you can with your terms, so you don't get caught in a cash flow squeeze or cash flow crunch. And if anybody has anything that we can help them with, you all have my information. Feel free to email at any time. We're going to absolutely make sure we continue these cycles, because right up to the baseball stadium getting started, this is an opportunity for people to get prepared and get their ducks in a row, so you don't be behind the 8 ball. What typically happens is they say, here's a bid, and then everybody else has already got their bid stuff ready to go with a few minor tweaks. And over here, our smaller struggling businesses are starting from ground zero. And by the time they figure it all out, the documents are signed, the contracts are signed, the bids are awarded, and you're still on the outside looking in. That's just the reality of what I see. So this is our way of trying to get ahead of that before we get to that point. And invite anybody else you know. This is open to anybody. It's not like our 10-week class or our 7-month advanced level entrepreneurship training. These are open to anybody who wants to participate. And you don't have to pay anything. And that's all thanks to people like Nikki.
I got an electrician friend that I want to try to connect you with on that on the construction thing that you got going on.
Okay, and I did to your email. I will certainly get, I'm almost getting close to the list, checking off everybody that has called or email.
Okay. All
right. Well, good night, everyone. Look forward to hearing next week. We'll be doing lunchtime, 12:15 to 1 o'clock. We're trying to make them 45 minutes so you can get in and get out and have the rest of your day. So look for that information to come out next week or before.
Right. Thank you all.
Yeah.
Thank you.
TC,
Thank you all. Have a good night.
You
Thank
too.
you,
Yes,
too.
Teresa.
Thank you.
do you have to re-register for that next week's class?
Yes, that will be a completely different Zoom link.
Okay, appreciate it.
All right, not a problem. I'll make sure everybody gets it though.
All right,
Nikki,
thanks,
thank you
sir.
so much. You did a great job. I really appreciate it.
Thank you, Terrence. Anytime. I love to do this. So just let me know if I can help in the future.
All right, and vice versa. So I know you do a lot of stuff trying to make sure the community reinvestment stuff. So if we can offer this opportunity for you and other opportunities to do this, we'll be glad to make sure that happens.
Absolutely. Have a good night.
Thanks, you too.
Okay, bye.
All right.